I'll just give it another 10 seconds before we start.
I love seeing where everyone's from. This is great. I actually used to live in LA, Cody. Unless that's Cody Barbo, then I do know you.
Could well be. Got Zach from Texas. Gail from Belgium. Hello, everyone.
Toronto, man, I've been talking to a lot of Toronto people lately. It makes sense. There's a lot of investing going on there, but I didn't really think about when we were putting this together. We do a lot of like user interview calls. People are signing up, and just a lot of London. Or I mean, sorry, I see London there, but a lot of Toronto.
Maybe you brought them all in, Kenny.
You know, if you want to give me credit, I'll take it.
Brilliant. Let's make a start then. So hello, Finimizers. Welcome to another Finimize Live. I'm Daniel, one of the analysts here at Finimize. It's great to have you all with us today and welcome you to today's event. We're going to cover the pros and cons of franchise investing. I'm here with Kenny Rose, founder and CEO of FranShares. With a media reach of over 300 people, Kenny Rose is a renowned expert on investing in franchises. Kenny was previously a franchise broker, where he helped individuals identify, evaluate, and buy a franchise that matched their long-term goals of either leaving the corporate world altogether or adding an additional income stream to their portfolios. His views on franchising have been featured in Business Insider, Forbes, ABC, The Hustle, American Express, the Amazon feature book, More Than Just French Fries, and a host of other publications around the world. Basically, if you want to know anything about franchise investing, Kenny's the go-to guy. Kenny, it's great to have you here. How are you doing today?
Thank you. I'm doing extremely well, especially seeing everyone come in from all over.
Brilliant. I'm sure they have a lot of questions for you. Let's dive straight in, Kenny, straight from the beginning. I'm going to start quite basic. So what is franchise investing and how is franchise actually going in and democratizing that whole space?
Yeah, so pretty much, I mean, everyone here has heard of franchising, or else you probably wouldn't have hopped on. They probably don't know that much about it. Most people go straight think about fast food, McDonald's, Subway, Taco Bell. But franchising covers all sorts of different industries. And, there's typically a lot of hurdles for people to get into and actually investing in a franchise. You got to have 6 or 7 figures of cash. You got to have a skill set that transfers over on actually running the franchise. And then you got to have time to do it. And so how FranShares is changing this is really taking a couple pages out of what we've seen from like real estate investing or private equity investing, where FranShares allows you to invest into a whole portfolio of franchises. So for as little as $500, you get equal ownership in over 50 different locations. So you're diversified across different geographies and different industries. And then as FranShares continues to grow, we actually pay out all of the returns back to the investors so they get consistent cash flow. And they also get to realize the gain in the equity of the franchise locations themselves.
All right, brilliant. So basically, just to build on that, you're kind of saying it gives people an in to kind of, the very foundations of starting a business. An entrepreneur would usually go in with a massive amount of capital, I guess, to start these franchises. And not a lot of people obviously can do that. So this creates a kind of fund where people can put their money in and contribute to that, right?
Exactly. It's just like if you've heard of like REITs or a real estate investment trust, it's a REIT for franchises. And so it's really an entirely new investment vehicle that we're putting out there for people.
Wow. So, I mean, the first thing when I saw this, I thought it's such a simple idea, it must already exist. And the fact that it didn't was kind of crazy to me.
I hear that one a lot. And honestly, a lot of it's because people there's not a ton of people in the franchise world, or they're with one specific franchise. So anyone who might have tried thinking of looking from the outside in, they might look at like a McDonald's or a Subway and be like, man, that's an operational nightmare and really thin margins that aren't going to attract investors. And so, with my years in the franchise industry, I really know more about different industries that you can invest in franchising that really have greater returns and don't have the employee headcount. Oftentimes they're service-based ones. They don't have a storefront or inventory. So, you really need someone who came from this. And also having worked at Merrill Lynch before, I really knew the finance side of it as well and just married it all together.
Brilliant, brilliant. So just building on for that then, what would you say are the pros and cons of investing in something like FranShares versus, your standard stocks, bonds, even crypto nowadays?
Yeah. So when it comes to the pros, I mean, honestly, cash flow is something I hear a lot from our people on the wait list that are, something that they're seeking after. They want to be able to add additional income streams to eventually work less or not be worried about if they want to, take a hike from their job at some point. And when you look at other investment vehicles, most of them don't provide cash flow other than real estate. And I'm a bit of the skeptic of the group as much as I'm, leaping out with a new investment vehicle. But, you see more and more institutional money and international money coming in and acquiring real estate. I read recently 1 in 7 single family homes is owned by institutional capital. So with all those prices being driven up, your returns are going to go down. And franchising is this great route where you can actually start locations at cost and really see this appreciation in equity while also building the cash flow for it. And we also come with a lot of transparency, both because franchising itself is actually regulated by the Federal Trade Commission, and then FranShares as an investment vehicle is regulated by the SEC. Then as far as cons, it's not crypto. This isn't something where overnight you're going to hit the moon in 2 days after. And so, I like people to be mindful of that. It's like, this is a long-term investment that you should think about. And a great new thing that we got the okay from the lawyers to say is that we are actually what's considered qualified small business stock because you're investing in active small businesses. So if you hold this for at least 5 years, you actually are not subject to capital gains tax. And I always have to put the little asterisk on there that, that there's legislation in the House right now that might take that to 50% of capital gains tax, but half is still good too.
Yeah, absolutely. No, that's pretty cool. And just building that, because I think you mentioned it was a more long-term investment. What does that mean in terms of liquidity? Say I put, I don't know, $500 or $1,000 into the investment. What is the time horizon on that, and what can I expect?
Yeah, so I always like to tell people, got to put my SEC cap on. Like any alternative investment, we cannot guarantee liquidity, but we are doing everything we can to help facilitate it as much as possible. So from day one, there's actually going to be a trading platform up there, so you're able to list your shares in case you do need liquidity, and then there'll be buyers out there that can go and purchase the shares from you. And also part of why we're excited to really continue to grow the wait list. I notice people signing up because that thing ticks live when you do sign up, so appreciate you. But we're hoping to really grow that wait list even beyond our ability to fill this first fund, because we want to be able to go out to people and say, hey, a couple shares have been listed, would you like to purchase them? And so that way we want to help facilitate that liquidity as much as we can. But SEC says I can't guarantee it.
Absolutely. No, thank you for that. All right, so moving on from that, I guess, you've said you've had a lot of background in the franchising industry. You obviously know a fair amount of it, but then what is your kind of process for deciding which franchises you invest in? Do you look towards more fast food, hair care, gyms, whatever? And then secondary, just to that, if I was particularly interested in fast food, for example, could I invest in a fast food index just on franchises, or is it more broad than that?
Yeah. So when it comes to how we choose franchises, so I've been in the brokerage side of franchising for almost 10 years now. And so I've looked into hundreds and hundreds of models. In fact, FranShares has relationships with over 600 different franchisors. And so how we actually look to what's going to go into the fund, we look at a number of factors: who the franchise leadership team is, what their background is with both this business and franchising as a whole. We look into if there's any litigation against the franchises, what the cost of locations are. They're allowed to make an earnings claim per that Federal Trade Commission regulation. So we look at that ROI factor in there too. We also get management structure. So we don't want things that are typically, you need a really hands-on owner operator. Tend to focus more on semi-absentee models. So if you think of like a Supercuts, you walk in and the owner's not in there cutting hair or working the front desk. And instead they're usually working full-time and they have a manager in place. So by working with these easier to run service industries while putting in our own extra layer of management on top of it, we're able to really maintain that consistency while still showing good returns. And honestly, there are a dozen other factors we look into it, but I've been told we only have 15 minutes to chat briefly here. And as far as like picking specific franchises and brands, so later on, we will let you get into specific verticals, but for now, because this is everyone's first entrance into the franchise world, we really want them to have a diversified portfolio with us, so that our first fund is going to be diversified across different geographies as well as different industries. And to be honest, it's rare that we'll get involved in fast food, even though that's what most people know franchising for. They also know it because that's the most competitive industry known to man, and you have to brand yourself constantly. There's literally hundreds, if not thousands, of franchises that you wouldn't know they're a franchise, but they find you when you need them, and they provide the service with consistency that they've seen from other reviews online. They've got well-known brands for those specific industries, and fast food tends to have the highest startup costs, the thinnest margins, the most employees. And, eventually we will get into that more, but frankly, it's when you got to have 50 plus locations in a portfolio for it to really make sense for investors. I'd rather not go for what's a flashy lure and more of what makes economic sense for investors.
Yeah, absolutely. That makes sense. I think it's one of those things, like it tends to be the less the sexy areas that are actually more lucrative, right?
Exactly. Yeah. I know people for years come to me say, like, oh, I want a McDonald's. I'm like, why? And when you break it down, it's like, oh, no, you want the line around the corner. You want to make income. They're like, yeah. I'm like, great. I've got plenty of ones that cost way less and have better return profit margins. So let's look at those instead.
Yeah, absolutely. I think you've touched on this before, Kenny, but just quickly, what types of returns can the investors expect? So obviously you've got the capital gains. You also get, I guess, dividends along the way.
Yeah, so we're holding off on the first 12 months or so before we start paying dividends, because we don't want to start taking money out of the franchises before they're really ramped up. But then after that 12-month period, we'll be doing monthly dividends. And you also get to realize that equity appreciation of the franchise too, especially around the 5 to 7 year mark. We'd really like to sell these portions of the portfolio. And frankly, private equity, if you've got 10 plus locations, they love to snap that up and get that cash flow for themselves. And so, and also they tend to sell for an even higher multiple when you have more locations, because frankly, you did the dirty work for them.
Yeah, absolutely. All right, brilliant. Just a quick reminder for our viewers, please put any more questions you have in the Q&A. We'll be going to that in 1 second after my final question for Kenny, which is, so we've kind of covered everything in terms of how FranShares actually enables us to invest in franchises, but then how do our viewers actually get involved in that?
Yeah, so we're actually in our final steps of the SEC registration. So for now, we have the glorious waitlist here, which I think 17 of you that hopped on just in a couple minutes here. But so, yeah, hop on the waitlist and honestly educate yourself. I'm very big about transparency and education. So we've got a great white paper that you can download there. Read our blogs and the ways that we think about franchising. And even when we do get that SEC approval, we're going to have about a week window before we start taking investments, because I want people to actually, create an account, log in, and read the offering documents. We'll be doing our own webinars to go over the specific fund itself. And so I want people to understand, how they're, what they're getting invested, because frankly, there's very little of that going on. And so I want to really change that.
Yeah, absolutely. That makes sense. All right, perfect. We're going to move on to our Q&A now. So first one is from Cody, actually. So is there a historical track record, and what is the IRR of that in the past, I guess?
Yeah, so what's great about franchising is I mentioned that we're regulated by the Federal Trade Commission. And so as part of that, and all the numerous things every franchise has to disclose about themselves, they have to say what it costs to start a location. So not just here's what the franchise fee is, it's from signing the agreement to opening your doors and working capital. What does it entirely cost? And they'll put that in the form of a range, because it costs different amounts to open something in North Dakota versus New York City. So we've got very strong cost estimates based on what they've already seen. And then an optional part in that disclosure is that they're allowed to make an earnings claim or a financial performance representation. So some franchises don't use them. Some say they're gross revenue. Some say, like gyms will say, like, average number of members. We only work with ones that can show what their net profitability is. So when we actually show what our target return percentages are, they're based on fact and based on existing locations, not, let's hope for the moon for it all. It's like, hey, these are our conservative averages, and we want to be able to make sure we're hitting within those marks.
Brilliant. And those averages, are they tailored to what your portfolio will also look like as well?
So it's specific to this portfolio. So based on the number of locations, how much investor capital we're taking on, profit margins, all of that stuff.
Brilliant. Okay, cool. So our next question is from Gail. She says, are there specific things to keep in mind in terms of franchise investing based on location or sectors or size?
Oh, I mean, a million things to keep in mind. But yeah, so honestly, like I like sector. There's never going to be a franchise that doesn't have competition. And if they do, they might just not be in a good industry. Franchising is really about consolidating industries. And so we look at, which industries are being consolidated, what are, their specific competitive advantages compared to other people in the space. And we look at, there's tons of big industries out there that are franchised in that people don't think of, like even besides food. They're everything from waste management to, window washing. It kind of goes on and on. I was going to go to the weird ones. It's got clothing recycling franchise. You got custom tailored suit franchises. I've seen the sex shop franchise. They have everything.
Which one of those makes the most return?
Well, I'm saving that for when we announce it's in the first portfolio.
All right, brilliant. So next question, I think it builds a little bit on what we talked about from Joe Berman. So why is this better or worse than individual stocks or mutual funds?
Yeah, absolutely. So I like to say it's complementary. As a former Merrill Lynch guy, I would say it's all about diversification. And even then, we'd say that you should have at least 20% of your portfolio in alternatives. So I'm not saying this is as opposed to that. You're supposed to bring in alternative investments to help diversify. So, be less correlated to the market and increase returns. And so you do this as an addition to your portfolio. So one, in case you see markets tumble like they've been a bit lately, you have some upside protection on the other area, because I don't care what Apple stocks do. And people are, still going to work out. They still have trash to be taken out. They still get their hair cut. So, it's about having a balance between everything. And I will say, if we did like a apples to apples comparison of like McDonald's stock versus McDonald's franchise, you do want both in your portfolio. McDonald's as a stock is based on royalties of the entire franchise system. But then when you're actually invested into individual locations, you get direct cash flow and direct equity. And, when you're investing in stocks, you don't really, some will pay dividends, but it's usually not very consistent. And people are looking for that, cash flow part of their portfolio to add into it.
Yeah, absolutely. And I think you said earlier, it's fairly similar to real estate, I guess, in terms of an inflation hedge, right? So the prices will go up.
So if you're saying like comparing stocks and mutual funds to real estate, I say both.
Yeah, absolutely. And it's kind of like having just an early portion of equity in a business, right?
Exactly.
Exactly. All right. Perfect. So next one we have is from Jennifer Birdsong. She says, are there only US franchises or are there other opportunities for international franchises?
We'll be doing international pretty shortly here. We've actually had several reach out about, franchises will sell like master rights to entire countries, and then they franchise them there. So we've already had several reach out to us that want us to invest alongside them in that. So we'll definitely be doing international stuff in the future.
Where would you start first, Kenny?
Ooh, well, I feel like I'm biased with you guys, but probably look in the UK.
London, right? Yeah. Brilliant. Okay. So another one from Amanda says, does this apply for investors in UK? I guess the question leading from that can people all around the world invest in franchise right now, even if they're just franchises in the US?
So right now, we're only allowed to do currently the US, Canada, and Puerto Rico.
Okay. Cool. Any more questions? Just having a look through the chat. Is there a green franchise option within the portfolio?
A green one?
Yeah.
Yes, there is actually. I love that you asked that. If whoever this, give them $10 for me. So it's actually in the waste management space, and man, it's very green and very cash flow positive. So I'm excited when we can release all the details on the specific holdings, because you'll be like, wow, I didn't know that was a company, and I absolutely love it.
Wow, that's brilliant. And that's a whole kind of chain?
Yeah. They've sold over 600 locations in the last 2 years. It is a magnificent chain, and one that you would definitely never expect to be franchised, but that's why we're here.
Wow, that's impressive, actually. All right, just having a look through the questions anymore. Yeah, we've got some people asking, if they've never invested before, should they start with franchise investing? Do you recommend kind of, I guess it just goes back to your diversification point, right?
Yeah, I'd say so. It's really about diversification. Also depends on like what your budget is. So we did try and keep it to a low minimum to get more investors in. So our minimum investment's $500. That being said, if you only have $500, I don't recommend going all in on anything. So, you know, it might not be right for you now, and we hope to see you in the future. You know, that being said, it is really important to have like, you know, investors of all sizes, because there's ones who have, you know, there's smaller check writers who will actually talk about the actual locations themselves more. So you got built-in customer base, built-in evangelists, and the bigger check writers. Like we've got from when you sign up on the wait list, we've been taking in things like where you're based, what you're thinking about investing. And we've got everything from your 18 to 24-year-olds that want to do $500 to a couple grand, all the way to your 55 plus that want to do 100,000, 200,000, $500,000. And we've got a bunch of family offices that are interested in joining in on this too.
Wow, so a lot of interest.
Yeah.
A lot of interest. I think leading on to that, then how long is the wait on the wait list?
Sorry, how long is it?
Yeah, from Cody, how long?
8,024. Oh, but we're just looking to be approved by the SEC next month, and so then we'll be letting people in. But you can also move up the wait list. You get a referral link, and if you share that with anyone and anyone joins the list, you get to move up it. And also anyone who ends up funding an account, you get $50 for every one of those.
Oh, that's pretty cool. I'm pretty sure our viewers would be interested in that. Another question from M. Court. Can we refer franchises to you?
Yeah, absolutely. It's actually been amazing how many have already been reaching out to us. So like I said, we already have relationships with 600 plus, and I've been having the leadership for everyone from like 1-800-Flowers, Church's Chicken, Quiznos, smaller franchises, bigger franchises. It's been really nice because even before us getting out there, they're getting the message and want to be a part of it.
Yeah, absolutely. I think one thing I had a question on was, it just builds on what you've already talked about, is, you know, you put all your management, I guess, in the franchises that you work with. You make sure you kind of know everyone, but how do you kind of manage that over time? You know, because I guess, you know, things move, everything's dynamic, so it'll be quite difficult if you have lots.
Yeah. Yeah, so we have a combination of ways that we do that. So just like in real estate, and like I mentioned, like REITs for real estate investing, they have property management companies that they work with. There's also franchise management companies that are usually industry specific that, you know, help people run multiple locations of franchises. Obviously, you can only work with them when you have a good amount in your portfolio. But this is the same strategy that like private equity uses when they have a bunch of locations, or celebrity investors. Like Shaq has a couple hundred locations, and Shaq is not working any franchise locations. You know, actually, I think he drops in occasionally to say hi and get some pictures. But you know, they have franchise management teams in place that handle the day-to-day stuff. So we partner that really professional management structure along with working with what are typically more semi-absentee franchises. So even more hands-on than those locations are typically used to having, but spread across a whole bunch of locations so that we can maximize that return on investment.
Okay, brilliant. So I think final questions from Daniel. So what he wants to understand what the kind of range of returns he could expect in year 1, year 2, compared to, I guess, the standard, you know, 10-12% from stocks.
Yeah, actually, we just filed this with the SEC, so I can finally start talking about it. It's great. Because before I'd always have to default like, hey, SEC, I'm not getting in any trouble with. So, you know, until it was actually in there officially, let me pull this up. So we factored in things like, you know, the ramp up time, royalties, and going up to like what their earnings claims are, not anything that we're doing superfluous on top of that. But we're expecting a total IRR of 16 to 21.86%. And that'll be 10 to 13.32% as cash yield IRR. And for equity growth, that's 6 to 8.54 percent equity growth IRR. And that is over a 5-year time frame. So obviously, like for things like the cash yield, that's going to start off slower. As I mentioned, we're not doing the first year payouts, and then they'll really ramp up over time as the franchises really ramp up too. Yeah,
absolutely. I guess on that, every year you would, I guess, give updates to investors on how the...
Oh, no, we want to do monthly updates.
Okay.
Oh, yeah.
Even better.
Yeah. Honestly, like as we're hearing stuff, I want our investors to hear stuff too. So not just like, you know, financial performance, but also when we're hiring people, when we're breaking ground on new locations, when we get big new clients, and even things like, you know, franchises themselves track key performance indicators even before you open. You know, they benchmark you against like what other franchises have done to be successful. So we want to show our investors like, hey, here's the KPIs they're benchmarking. Here's where we're stacking up. And, you know, so as we get into like what we're predicting, we'll be able to say like, hey, here's where we hit on these areas and here's where we missed on these and what we're doing to improve that.
Wow, that's brilliant. I guess it gives total visibility to everyone, right?
Yeah, again, thing that's missing in investing world today.
Absolutely. And just on that, then I guess do investors kind of have a say in what you do then, or
I mean, everyone who signs up on the wait list, I think it's the second email, they get a call to invite them to chat with me one-on-one for 15 minutes because I want to actually hear from everyone. So yeah, I'm taking all the feedback. I've only had about 200 of those calls, but I expect I'm going to have a lot more. So yeah, honestly, I want to hear feedback from everyone, and everyone's voice means a lot.
Yeah, absolutely. Absolutely. That's brilliant. I think I've gone through all the Q&As. Let me just have a last look, because I'm sure there's lots of questions for you, Kenny. Is there a time limit for when the waitlist will be closed?
Just when the fund opens. So, wait list until, and honestly, we'll still probably keep the wait list open after that, just because, like, to be honest, I don't think we still got some room, but eventually we're going to hit this point where we can't get everyone on the wait list into the fund. And so I want to make sure we hold their place for when we launch that next fund.
Absolutely. I guess the point is you can't take too much capital, otherwise you just need to make sure you do it right.
No, we actually can take too much capital.
Oh, you can?
Yeah. So when we register with the SEC, we actually say how much we're going to raise and what the use of funds is. And so we're doing a crowdfund of $20 million. And so, right now our average intended investment is a little over 15,000 per person. So yeah, that could go up pretty quickly.
Wow, and that's just based on the investments that you guys choose to go into, I guess.
Oh yeah, we haven't even given the full details of the fund yet. I imagine that number is going to go up a lot once they see what we're investing in.
Wow, that's brilliant. Look, I think I've learned a lot from this, Kenny. This has been really, really interesting. I think I think a lot of our viewers are going to find a lot of value from what we talked about today. Franchises, when I came to this, I thought franchises, McDonald's, Subway, but it seems to be
everyone does.
everything else.
That's why I got into this industry. I was coming off Merrill Lynch and got introduced to the franchise world, and I'm like, oh, like McDonald's, right? And they're like, no, everything's franchise. I'm like, okay, I want to learn some more. And then 10 years later, we're launching the fund.
Absolutely. Brilliant. I appreciate your time, Kenny. That has been really, really, really interesting for all of us here. And thank you to all of our viewers. We will all see you, in the next Finimize live session. If you have any questions, I guess, for Kenny, have you got anything they can reach out to you? I guess they can go on your website.
Yeah, website, or add me on LinkedIn too. I'm an open book there.
Brilliant. Thanks a lot. Appreciate it, Kenny. Thank you to all our viewers, and see you all next time.
Yeah, thank you very much, everyone. And especially everyone who signed up while we were chatting. Appreciate it.
Cheers.